Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Thanks for inviting me on, Jim. Always a pleasure.
You feel we're in confusing times. I know over the past month, people, a month ago, they thought the markets would roll over. Have they? Will they?
You put a gun to my head and say, I want you to make a case for Dow 50,000. I could do it. I would say, well, if they get change the rules so that all these U.S. multinationals that hold $1 zillion overseas bring that back, that they don't have anything better to do with it than buy their own shares. So that's Dow 50,000. But if you were to ask me, okay, well, give me a reason why the markets have, maybe U.S. securities markets have topped, I'd say, well, because as of yesterday, we hit about 5 targets of mine within each one a millimeter. I had a target coming in on the diamonds at 231.68, I think it was. NASDAQ E-mini futures, I was looking for 6116, I believe it was. E-mini S&Ps, I had a target put out to my subscribers, 2161.25. We overshot that by a point yesterday, and then came down. So the weird thing is, I'm thinking, well, geez, we had all these things working together. Maybe yesterday was the top, and I see that even as I speak, the E-minis are sort of climbing up against what they lost this morning. They're just recouping it, and I'm tempted to say if we ain't getting a top here, I don't know where and when it's going to come. But I like to think that the markets bear some relationship to reality, and reality to me is that we have topped in 2 key economic sectors, the housing and auto sectors.
The Bank of Canada says, at least in Canada, they're getting indicators that we're hitting a labor shortage. Restaurants in Vancouver are either closing or reducing their hours because they can't find cooks.
Well, it's a little different here. I'm told that in Florida, I just moved to South Florida, and that a lot of particularly the independent restaurants are having trouble surviving, mainly because of minimum wage laws. They boosted the minimum wage and are pushing minimum toward $15, and this has really hurt the restaurant business incredibly. It's just between that and having to provide health care in some Obamacare fashion, it's too expensive now to operate a restaurant. So you wind up, and I was in San Francisco last week, and a friend of mine there is working with a couple partners to open a beer garden, and he says that this place, which has a view of the Golden Gate Bridge, well, that's worth an extra $1 for every beer he sells. But I'm thinking he's going to have to charge another $1 per beer just to cover the these wage costs that all the restaurants have borne, and it's particularly true in San Francisco. They like to enforce rules like that, make sure make sure everybody's making $15 an hour. And I think the number of restaurant closings in San Francisco is enormous. It's sort of an irony because the city's politics are so very liberal, and they're discovering that the foodie part of their lives is disappearing.
Well, how can people survive on less than that in expensive cities like Vancouver and San Francisco?
I don't think that the whatever the answer is, and I don't have one, the answer is not to raise the minimum wage, because as you can see, all it's doing is eliminating jobs. I mean, that's been a point that has been statistically irrefutable going back forever. You know, you've got the bleeding heart saying we've got to, you know, raise the minimum wage, but you know, there's never been an empirical way of looking at that other than it's going to kill jobs, and that is so true right now in the restaurant business in San Francisco and other businesses where you know, wage earners depend on tips.
Is it a fact too, maybe the people who are going to those restaurants can't afford to tip anymore?
No, they've tipped fine. You know, it turns out the tips are indexed to inflation. When the restaurants raise their prices, the people working for tips automatically get a raise, and we've seen tip inflation. You know, we used to tip 15%, and now, you know, it seems like 18 to 20% has become more standard. And hey, if you want to be a little bit generous, you can throw your waiter an extra 5%. So people are tipping. You know, the waiters have had a very large raise in those terms. They've let's say they've been able to keep up with inflation a lot better than assembly line workers, for one.
Mm-hmm. Well, in BC, they have a law. The minimum wage for people who get tips is actually lower than the standard minimum wage. And we're also nowhere near $15. It's 10 something, I think.
Well, I think I saw a figure that talked about what the actual costs were to McDonald's for each $1 raise in the you know, in the minimum wage, and it's amazing that McDonald's has survived. You know, but you can see how they're doing it. They're increasingly automating their delivery system, and you know, we're going to be at the point with McDonald's that we are now with you know, with banks and Safeways. You know, you don't have checkout clerks anymore or tellers. It's all robotic. So, you know, anybody who doubts that just artificially monkeying around with the minimum wage, pushing it arbitrarily higher doesn't eliminate jobs, they ought to have their heads examined.
We'll have more with Rick Ackerman right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Ridout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Welcome back. We're chatting with Rick Ackerman. Rick, how confusing or how hard is it for traders to actually make good trades right now, because the markets are in territory we've never seen before? We've gone years and years without really a super big correction. People keep expecting one, and it doesn't happen.
Well, we at Rick's Picks, we break all the rules, Jim. You know, you hear a lot of people say, hey, you can't day trade. It's just crazy. The market's too crazy. But, you know, if you look at the market in the simple way that my subscribers do, all you see is ABCD patterns, and it's very tradable, even though some of the big firms are not, the trading desks are not making money. You know, we saw a shift by one of the major brokers toward wealth management, whatever that is, and away from trading, and it's sort of picking up the slack. But I think the market's very tradable here. Certainly not in a even a swing trade buy and hold way, because we just don't get the trend is up, but it's you can't simply get long it and stay long it simply because we have this ratcheting rally where it goes marginally higher from one day to the next, but the swings against you, like to get from one peak to the next, you maybe make $1, but you'll have to weather a swing against you of like $3, and that reverses the risk reward that I hold fast to, which is never risk more than $1 to make $3. You're risking $3 to make $1 to simply stay on the long side of the broad averages. So you wind up really having to trade as nimbly as you can, and it's work, but it's still doable.
Of course, now we keep hearing you just have to have ETFs. You don't need a financial advisor. Is this more like you really do need an advisor, but people don't think about them?
Well, if I were to make a case that you don't need an advisor, the reason is that they don't know any more than you do. I know some good guys out there. The very best of them has simply kept his clients at the long end of the yield curve. He's been in fixed income instruments for 38 years, and he's done pretty well with it. This guy probably has more money under management than he's the most successful advisor I know. So he's stuck with one strategy, and it's essentially deflationist. He's had a bull market in bonds now since the early 1980s, and so as far as what do you know, or what does the average person know about ETFs? You can go in and sort of pick your flavor and say, I like gold, or I like the idea that we're going to have sunshine for the next 30 days. There's an ETF vehicle that allows you to make just about any bet. You can trade anything. But in that case, you've got so many choices that it winds up being, too difficult to make the choice. So you depend on a quote unquote expert. Trust me, most of the guys out there passing themselves off as experts don't know any more than you do.
We'll have more with Rick Ackerman right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're talking with Rick Ackerman. Rick, copper has been on a real tear lately. Do you see that continuing?
Copper, I'd like to say I'm mystified, but more, I have to sort of come around to seeing what it says. Copper is a very good indicator of real economic activity on planet Earth. And it usually, over the long term, doesn't give you false signals. It means that basic manufacturing is starting to cook. And the only thing I'm looking at the long-term chart in copper, and we're about to break out above a high that was made in 2014, earlier in 2014. But the rally that has been occurred in copper since early January, copper was trading around $1.93 a pound then. We're up at currently trading $3.16. So the rally is enormous, and it's definitely not a flash in the pan. And the only interpretation I can offer that makes sense is that it's predicting a global manufacturing resurgence. This would be predicated on let's say a rising global middle class, and I think that starts really with markets in Asia, and it's something that you might have seen in emergence in the late 1990s until the Thai baht collapsed and sort of threw everything into disorder. But I think that over time, the Asian markets have regrouped, and copper seems to be saying that we're on the cusp of an explosion in middle class consumerism.
Well, also, too, you have all the storm damage in places like Puerto Rico, the Virgin Islands, the Caribbean, Florida, Texas. All those power lines have to be replaced with copper, don't they?
Well, that's very true. Well, you know, you could also replace them with digital and satellite signals, you know, and there was a time when copper was weak because the global story was that they were going to build a telecommunications infrastructure in, well, for one, Africa without using copper wire. But, yes, this hurricane story, all the damage that we've had, just in Houston alone, it's not all going to be wireless and fiber optic. You know, there's some copper involved. So, you know, whatever story you had pushing copper before the hurricanes hit, it's more compelling now.
And of course, China's building their One Belt, One Road system. That's going to suck up a lot of material.
Yeah, and that's you know, the story about what China is doing is almost kind of like the Facebook story. You know, Facebook has a gazillion customers. I don't know, probably close to 2 billion customers. And so how can Facebook lose? All they need to do is find one more revenue stream to exploit. And so, you know, whatever China is building is definitely going to be at the margin affecting commodity prices and even our perceptions of the global economy.
Although it's happened in the past, people in China have stockpiled copper, treating it like gold.
Yeah, treating it like gold only when, you know, gold is in some sort of speculative mania. You know, it's been a while since gold has been treated like gold, and but there's no question copper is a hot market here, and it's attracted a lot of momentum players who are not so much concerned with the reasons as they are with the fact that you look at a chart and it's just headed up, up, up.
Of course, we all know when something is noticed by the general public, it's usually too late to make any money on it.
By the general public, yes, but you know, it's so hard to get a fix on what the general public recognizes, what they understand, what they think. You know, you'd have to read about that in the newspaper, and I don't think we could ever trust the newspapers to get it right about what we're thinking. So I don't know. You wind up, you know, with essentially, well, I try to tune that out and simply look at the charts. Is
one of the problems people expect events to actually affect the markets and don't look at the markets as something that actually is self-contained?
Well, for sure. I mean, you know, the people always want to connect the markets up with whatever observable reality there is out there. And, you know, those of us who are more concerned with the timing know that if there's a connection there, it's ineffable. You really don't see it. You have to detect it in certain ways, whether it's tea leaves or charts or whatever. So in a way, that kind of works in favor of the global economy right now, because with the stock averages, you know, within pitching wedge distance of all-time highs, people tend to think, well, if there are economic problems out there, if the banking system could collapse any day, or if the Social Security system is bankrupt, or if America's pension system is headed into disaster, those things all seem more, we can cope with them because, well, how bad can things be if stocks are near record highs? So the psychological importance of stocks being there, even for all the wrong reasons, you know, stocks are high simply because the central banks of the world have pumped enormous money into that project, you know, and a lot of it is indirect, but when these companies can borrow money so cheaply that they do it to buy their own shares, even though they have surplus accounts, you know, sometimes into the tens of billions of dollars, you know, 10, 20, $50 billion. Apple holds, I think it's $250 billion overseas. So there's so much that even the companies that have that kind of cash, they go out and they borrow more so they can buy their shares, essentially driving up the earnings multiples, you know, shrinking the float, and it has the effect of driving shares higher and driving per share earnings growth higher, without producing any corresponding increase in economic activity. So that's the whole fraud of the bull market right now. And, it looks like a one-way dynamic. It's like, how could it possibly reverse? What could possibly go wrong? And even though I can't answer that question specifically, I can tell you at some point, Jim, something will go wrong.
Yeah, the old joke, you get on to the world's first automated airliner, it says, welcome aboard this automated airliner. Nothing can go wrong. Go wrong. Go wrong.
Right. That's where we are now, and the go wrong reminds me of every application I use. We're hearing about all the miracles that artificial intelligence can bring, and my cell phone, the voice recognition software isn't even intelligent enough to put a comma there when I say the word comma. It types out COMMA. So somehow, whatever genius is going to bring us to an AI future, at this stage, it's really kind of a joke.
Well, somebody commented on Facebook, how come all these futuristic movies don't portray the problems that we have with our high tech? I said the Star Trek movies do it all the time. Otherwise, Scotty wouldn't have a job.
Right, and I think you also have to look at Blade Runner kind of reimagined the future in that interesting way of, here's a future that doesn't work. And the production design of Blade Runner, where they're in a constant, it's always raining and it always looks like some god awful slum in L.A. that's all neon, and I think that kind of dystopia is definitely there for those of us who see the glass as half empty.
Rick, always fun talking with you.
Likewise, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. If you have any questions for us or our guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.